How's it guys? Peter here. Welcome to my second portfolio update video. This is a series that I started last month to give you guys kind of a monthly update on exactly where I am invested, what products I buy and why I do it. And the reason why I started this is because all of you who are currently invested or who recently started investing are probably aware of how bad the markets are doing. And I received many people contacting me being very anxious about what is going on. And therefore I decided to give you guys a transparent look at exactly my portfolio, because obviously, as you know, I make a lot of videos about finances on this channel and I would like to believe that I know a thing or two, but I want to show you guys that even I am suffering and most other people are. We all are. That's what's happening in the markets. America is currently in a bear market, meaning the S&P 500, which tracks the top 500 companies in America, is down more than 20% from its all-time high. So comparing your portfolio to the overall market, which is down 20%, it just means that your portfolio will probably also suck, just like the rest of us. So I made my first portfolio update in the month of May. And as you guys probably saw, my portfolio was a bit of a mess, especially my EasyEquities ZAR and my US dollar account. Reason being, I bought a bunch of individual stocks end of last year because the markets were at an all-time high. The markets are full of hype. Everybody wanted to make a quick buck and I got greedy. So I followed a bunch of hot stock picks and on YouTube and Twitter and everywhere. I bought a subscription to the Motley Fool where they give you a bunch of individual stock recommendations, and yeah, I bought a bunch and I didn't really know what I was doing. So lesson number one, don't put your money into things that you don't understand. I did not understand how to pick individual stocks. I just did it on a hunch and now my portfolio was suffering. But yeah, we will get to those individual stocks. But the first account that I want to look at is my tax-free savings account, which I believe is the one that is making the most sense at the moment. Okay, so my current value is 28,920 Rand. It's a loss of 5.99% or 1,845 Rand. This month I added 2,500 Rand. So initially I had 6 different ETFs, but in order to try and clean up my portfolio a bit, I sold 2 ETFs, the Satrix MSCI Emerging Markets and the Satrix MSCI World ETF. The reason being, I initially used a combination of these 2 ETFs to gain exposure to the entire world, because the MSCI World tracks the developed market and the emerging markets tracks the developing markets, and together they basically tracks the whole world. But then CoreShares brought out the Total World ETF, which is just great because that basically contains my whole strategy into one ETF. So I sold these 2. Something that I want to make clear in this video, I did sell a bunch of things this month, but I did not sell because I panicked. I sold because I wanted to restructure my portfolio. There's a difference. Please do not go and sell your stocks or your ETFs unless you really have a good reason. You will see that I made a couple of sales, but then I reinvested the money that I made from those sales directly into my other holdings. So I just want to make that clear so don't get confused and after this video go and sell all of your holdings because Peter did it. That's not why I did it. There was a clear reason behind it. So yeah, but anyway, so now I have 4 different ETFs in my tax-free savings account: the CoreShares Total World ETF, Satrix Top 40, Satrix Property, and the Signia iTrix Global Property ETF. I put 2,000 Rand into the CoreShares Total World ETF and 850 Rand into the Signia iTrix Global Property ETF. Right, so why do I have these 4 different ETFs? My ideal balance that I'm aiming for in my tax-free savings account is 80% equities and 20% properties. Why? Because a tax-free savings account is a long-term investment, meaning that you need to go as aggressive as possible, especially someone my age. I'm 26. I have at least 35, 40 years to go before I retire. So I want to go as aggressive as possible, meaning shares. Shares are your most aggressive investments. And when I say most aggressive, it has the best chance of delivering the highest returns. But I also have property in my tax-free savings account, albeit at a lower allocation, around 20%, because the way that property ETFs or REITs, real estate investment trusts, are structured, they are the most tax efficient vehicles available. And because this is a tax-free savings account, they make a lot of sense. Now I have the 80% shares allocation because I want to go as aggressive as possible, but then also 20% in property just to gain that tax-free savings benefit. Important here, your main aim of your tax-free savings account should not be the tax-free savings part. Yes, it's great because you are saving tax, but the growth on your investments is primarily aimed at the asset allocation, meaning the combination of shares, property, bonds, and cash. So your first priority should always be your asset allocation. Then you can make that asset allocation as tax efficient as possible. And that's basically what I'm doing here. And then I also want to split my allocation, my tax-free savings account 50-50, meaning 50% local and 50% offshore. Reason being is I just want to have exposure to both South Africa and the rest of the world. If we look at the entire world economy, South Africa doesn't even make up 1% of the total world economy. So it makes sense to diversify offshore. But then also your local shares and property are more tax efficient in a tax-free savings account than your foreign investments because of the whole way that dividend withholding taxes are structured. But yeah, that's what I'm aiming for. I'm currently weighted 31% core shares total world, 41% Satrix top 40, 21% Satrix property, and 7% Signia global property. So you can see that I'm underweighted in my core shares total world and my Signia global property holdings. So basically my strategy moving onwards from here is to just buy the total world and Signia global property until I get that 40-40-10-10% allocation. Right, so now next we're moving to my EasyEquities ZAR account. Okay, so this is an interesting one. I kind of have this love-hate relationship with individual stocks. On the one hand, I know that the best and easiest way to invest your money, especially if you are not an experienced investor, is just to put your money in an ETF or an index fund and be done with it. It's easy, it's simple. You can just buy the core shares total world and you should be fine. But then on the other side, individual stock picking is more of an advanced type of investing. It's more risky because your risks are more concentrated. If you only have 5 stocks and one goes down, then it's basically 20% of your portfolio. But on the other side, it brings a bit more of excitement into your investment portfolio. So I decided, listen, I am going to give it a try, but I'm going to limit my exposure to individual stocks. Now, if you saw my previous video, I had over 28 individual JSE stocks in my EasyEquities ZAR account, which is too much. There's no way that I'll be able to keep track of all of these. So what I did, I'm just going to give you a quick overview of where my account currently stands. Current value is 7,739 Rand. That's a loss of 0.47% or 36 Rand. I added 1,500 Rand. As I mentioned, I had 28 individual stocks, 1 ETF and 1 EC10 bundle. So this month I sold 16 individual stocks, my ETF and my EC10 bundle. Now, before you fall off your chair and get all hysterical, I did not sell my EC10 bundle because I panicked about the crypto crash. I sold it in this account because I transferred that money to the EasyCrypto portfolio, which is also just a different account from EasyEquities, where I want to keep my crypto coins, because my main aim for this ZAR account and for this video series is to only focus on individual stocks in this portfolio. Hence why I moved out my crypto portfolio, because that kind of messes with my numbers. It's not really an individual share. That's why I sold it, not because I panicked. Make it clear. Okay, so I'm just going to tell you the stocks I sold, and then we're going to look at the ones I own and what I bought. So when I initially bought all of these stocks, I just put like 100 Rand in each just to test it out. So I made a profit on some and a loss on others, but it basically cancelled out. But yeah, the ones I sold was Adcock Ingram, First Rand, Glencore, Nedbank, Standard Bank, Anglo American Platinum, Avenge, BHP Group, Bitcorp, Clicks, Richmond, Mondi, Storage, Advitech, City Lodge Hotels, Afrimat, EC10 and the Satrix Capped All Share ETF. And the 12 individual stocks that I now own are African Rainbow Capital, British American Tobacco, Capitec, MTN, Naspers, Prosus, Purple Group, Renogen, Sasol, ShopRite, Sibanye Stillwater and Transaction Capital. So why did I choose these 12? I basically looked at all of the stocks that I had, and the ones that I decided to keep were the ones that I actually knew something about. Not a lot. I didn't do proper technical fundamental analysis and all of that advanced individual stock picking jargon and skills. It's just a way for me to start with less so that I can start to learn how to pick individual stocks, because it's much easier to try and work with a portfolio of 12 stocks than 28. So yeah, these are the stocks that I currently have. I probably want to bring it down to between 8 and 10 eventually. So I might sold 2 to 4 in the future. But yeah, this is where I'm currently at. So what did I buy? I put 400 Rand in Sibanye Stillwater, 1,000 Rand into Naspers, 1,000 Rand into Prosus, 400 Rand into MTN, 400 Rand into African Rainbow Capital, 400 Rand into British American Tobacco, 400 Rand into Capitec, 400 Rand into Renogen, 400 Rand into Sasol, 400 Rand into ShopRite, 400 Rand into Transaction Capital Limited, and 975 Rand into Purple Group. I don't have a specific balance of stocks that I want to achieve with this portfolio. This is again a way for me to learn. So moving forward, I'll add about 1,000 Rand per month to this individual stock portfolio, and then I'll basically just try and buy the dips. So the one that seems to be suffering the most for the month, I will buy. But yeah, these are my picks. Let me know down in the comments what you think about them and if you agree or not, and if you have any recommendations. We are all here to learn from each other. I'm by no means an expert. I'm also learning, but I just want to give you guys kind of a real life example of how I would go about doing this investing thing. All right, then we move on to my EasyProperties portfolio. My current value is 997 Rand. I don't really have a profit or loss. This account, I'm just going to add about 500 Rand per month. I now own one property, the REIT, and I bought one property, the Capital on Bath. And my strategy behind this account is just to learn the platform. I want to obviously make tutorials and helpful guides and reviews for you guys. So at the moment, I'm just putting 500 Rand a month into this account and buying whatever properties are available and trying to formulate a strategy on which properties you should try and buy. But I think this is a really great initiative from EasyEquities, as it gives you the chance to invest into property without having to put down millions of rands. Okay, so next up is my EasyEquities USD Account. So this is very similar to my EasyEquities ZAR account. I bought a bunch of individual stocks, 34 to be exact, end of last year, and it just didn't work out well. I put about $10 into each individual stock, so luckily I didn't lose a lot of money in monetary terms, but the portfolio did not look very great. So the current value is $2,887. It's a loss of 8.49% or $268. This month I added $972. Initially I had 34 individual stocks and 3 ETFs, and this month I sold 28 stocks and 1 ETF. Again, the reason why I sold it is not because I panicked, it's because I wanted to reduce my portfolio to fewer stocks so that I can better keep track of them and actually invest in the ones that I believe will have good long-term growth. So yeah, I'm just going to go quickly through all of the ones that I sold. AMD, Airbnb, Atlassian, Autodesk, Cloudflare, DigitalOcean, DocuSign, Fiverr, Ford, Intuit, Lululemon Athletica, Matterport, Netflix, Nvidia, Palantir, PayPal, Pinterest, Roku, Shopify, SnapScan, Snowflake, Square, Tradedesk, Unity Software, Upstart, Zebra Technologies, Zscaler, Vanguard, Total World ETF, and Walt Disney. And now I currently own 8 individual stocks and 2 ETFs. So these are Google, Amazon, Apple, Berkshire Hathaway, Meta Platforms, Microsoft, Tesla, Twitter, and then the 2 ETFs are Vanguard S&P 500 and Vanguard FTSE Emerging Markets. All right, so let's see why I made all of these moves. Most of the stocks that I now own are considered blue chips, meaning they are big, large, established companies that have proven themselves in the past. So these are all names that you are probably aware of. And I'm going to start with these stocks because I have a strong conviction that most of these stocks will still be with us in the next couple of years and will still continue to grow. My highest conviction is with Tesla because, you know, hashtag backing our boykie from Pretoria, Elon. Anything that guy touches turns to gold, but that's not why I'm invested in Tesla. I just think that the company has a lot of innovation and they are far ahead of the pack. And then the 2 ETFs I own, it's the ones that I initially invested in last year just to try and diversify away from the rand into the dollar. Both of them are down quite a lot, so I'll just wait until they recover their losses and then I'll probably sell them and reinvest the profits into the other 8 individual stocks. My EasyEquities USD account is mostly for my offshore US individual stock portfolio. I know it's still a bit demakar at the moment, but eventually I'll hopefully just have my individual stocks. The aim of this specific portfolio is to try and beat the S&P 500 index, you know, to try and beat the market, which we all know is basically impossible and I will probably fail. But again, for this series and for you guys to follow, I think it will be quite fun to see how I fare. And then basically what I bought this month, I put $105 into Berkshire Hathaway and Microsoft. I put $175 into Google and Amazon. I put $95 into Meta and Twitter, $146 into Apple, and $204 into Tesla. I don't have a specific balance that I'm aiming for with this portfolio, but my strategy is to add about 1,500 Rand per month, buy the dips. I want to keep my portfolio between 8 and 10 stocks to not make it too difficult to keep track of. of, and I want to see if I can beat the index in the end. You guys probably noticed that I invested quite a lot this month. The reason being is I kind of waited for the market to dip, and I waited for the bear market to hit before I went and doubled down onto buying these individual stocks. So hopefully it will start to go up again. Okay, then next is the EasyCrypto portfolio. This is still part of EasyEquities. So my current value of this portfolio is 4,390 Rand. It's a loss of 2.43% or 110 Rand. So what I did is I basically sold my EC10 token in my EasyEquities ZAR account, and then I transferred the money to this EasyEquities crypto account, and then I bought the EC10 token here. So that's basically all that I did. And my strategy is basically just to add about 500 Rand per month and buy the EC10 token. You can also buy individual coins like Bitcoin and Ethereum and a couple of others, but for now I'll just buy the EC10 bundle. Right, then a thing that I didn't mention in my previous video was my RA, my retirement annuity. This RA is invested in the Signia Skeleton Balanced 70 Fund Unit Trust, which I started in about August last year. The value is 26,000 Rand and it's currently at a loss of 4.12%. So my strategy with this RA is I basically just put in 500 Rand per month into this fund, because that's the minimum that you need to invest if you want to have a debit order go off every month. But then I also make lump sum RA contributions whenever I have funds available. Ideally, I want to invest 3,000 Rand per month into my tax-free savings account and 3,000 Rand per month into my RA, and then whatever is left over I can play around with in my EasyEquities ZAR account and US dollar account and crypto. But yeah, it just depends on what my finances looks like. Right, then I also have an offshore brokerage account of Interactive Brokers. My current value is $1,590. I'm at a loss of 19% or $353. I basically just own two ETFs, the VWRA, which is basically the Irish domiciled ETF that tracks the whole world economy, and the EIMI ETF, which basically tracks the emerging markets of the whole world. So I also bought these two ETFs at the peak of the markets, and that's why it's kind of dying like this. But I don't really have a strategy with this account. I'm just going to leave it as it is. I'm not going to sell anything. I'm not going to deposit anything at the moment because you need to save up quite a lump sum to warrant the transaction costs. So I will probably just save up for a lump sum and eventually deposit that. But yeah, just to give you guys full transparency, that's what is in this account. Then I also have some crypto with Luno. Current value is 1,995 Rand. I'm at a loss of 50% or 4,130 Rand. I own two crypto coins, Bitcoin and Ethereum. I don't really have a strategy with this. I'm not going to buy any more on Luno. I would rather use the EasyEquities crypto platform because it's cheaper. So I'm just going to wait until I regain my losses on this account, and then I will transfer the money over to buy the EC10 bundle. With Revix, I also have crypto. My current value is 7,950 Rand. I'm at a loss of 46% or 6,663 Rand. I didn't really buy anything this month. I own one crypto coin and one bundle, the top 10 equal weighted bundle and Bitcoin. My strategy with this is also to either buy the EC10 bundle or the Revix top 10 bundle. The only difference is the EC10 bundle is weighted by market cap, meaning if Bitcoin is worth more than, say for example, Dogecoin, then the EC10 bundle will invest more into Bitcoin, but the Revix top 10 bundle is equal weighted, so both of them will get the same amount of investments. So it's either or. I don't think there's really a preference. Usually in bull runs, the market weighted bundle like the EC10 will do better because the altcoins tend to perform better, but then in bear markets like we are currently in, the more stable blue chip coins like Bitcoin and Ethereum tends to do better. So then an equal weighted bundle like the Revix top 10 bundle should do better. But I just have a combination of both just to have the best of both worlds. Alright, so now let's look at my total portfolio value. In ETFs, I currently have 81,780 Rand invested. Passive unit trusts, I have 26,000 Rand. In individual stocks, I have 26,000 Rand 270 Rand. Property 997 Rand, and crypto 14,330 Rand. So if we convert this to percentages, in ETFs I have 54.7%, in passive unit trusts 17.4%, in individual stocks 17.6%, in property 0.7%, and crypto 9.6%. And this brings us to a total portfolio value of 150,000 Rand. Alright, so when I look at my total portfolio, Obviously, I'm too heavily weighted in crypto. 9.6% is too much. I'd rather aim for between 3 and 5%, and I ideally want to aim for at least 75% into ETFs and passive unit trusts because they are well diversified, cheap and simple, and just safer. And then the other 25% I can play around with individual stocks, property and crypto. So I'm not there yet. I ideally have to buy more of my well diversified ETFs in my tax returns account and RA, and then less into my individual stock portfolio. But this is just kind of my ideal world. It will change every month depending on how the markets are doing, but that's just to give you guys an idea of how I am invested. Now, as you can see, my portfolio is still suffering, but I am going to become much more involved in my portfolio, and I will continue making these updates every single month. So yeah, I hope you guys found value out of this. Please let me know down in the comments if you have any questions. I know I talked a lot in this video, but this is a new type of video style that I'm trying to create. This is obviously not scripted. So let me know if you guys like this kind of casual chat where I just go through my portfolio and give you a couple of pointers. And yeah, let me know what you think about my individual stock picks. It will be interesting to see what your opinions are. And yeah, if you enjoyed it, clap a like, and I'll see you in another video next week. Cheers.